Robert Marquardt joins me now once again. Hi, very nice
Andrea,
to see
how are you?
Hello
nice to
there.
see you again.
When last time we met, we talked about Greece and Greek bonds. How do you feel about Greek bonds now? Are you out of them? Are you still in them?
That was you put me on the spot there. You know, when I said client managers were buying Greece, one in a situation like this can never be on one side of the trade. You'd want to own 1 year Greece versus selling 3 year Greece.
Yeah.
Or own Greece versus selling a Spanish bond or an Italian bond, short selling as a hedge in a bit of a relative value play. Those have played out. They've played out well. I think managers at this point have really kind of neutralized portfolios, taken a lot of that risk down. And like most investors, I think they're in a wait and see period as far as debt goes.
In terms of Spanish and Italian debt, is there still value there? Are hedge funds still involved heavily in Spanish and Italian debt?
You know, I would say not. I would say, again, those positions tend to be neutralized or they're out of them, and it's so politically dependent that it's not really what's in play. What tends to be in play at a time like this, if I may, tends to be currencies,
yes,
interest rates, things like that, which I...
Well, just before we move on to currencies, I wanted to ask you about Greece. There is a thought that Germany and France simply cannot let Greece go under. Do you still hold that view that they must at least have a very ordered default?
Absolutely. Absolutely. One way or the other, that debt must be reduced. If one looks at history at all, you see that a country like this cannot grow its way out of this level of debt. So it will be combined with statements about recapitalizing the banks or ECB support sufficient to help take it down or whatever it might be. But it will be a...
Now let's look at currencies. You know, we've seen the Swiss franc at these record highs. The euro also. I mean, what are hedge funds doing with currencies at the moment?
Yes, great question. You know, over the last few years, the dollar has been your funding currency of choice. Really, when hedge funds use any of the G4 zero interest rate currencies, they're using them to fund something else, like a Brazilian real or Korean won or something, a stronger currency. So that funding currency is moving from the dollar now to the euro, which is perceived as a currency which ought to weaken, interest rates ought to fall, so you might want to borrow it and fund other positions with the euro.
Right.
And by association the Swiss franc, because they've effectively tied themselves to the euro.
Indeed.
So,
and when we look at the equity markets across Europe and elsewhere indeed, is there, you know, you were talking about hedge funds being very conservative at the moment, but there must be some buying opportunities when you look at...
Well, that's right. I think whether one's in equity or in credit, I think there is certainly a value proposition. You've had the DAX that's off 31%. You've got corporate credit that's in some cases yielding you double-digit returns again. And I do see hedge funds starting to nibble at it, but we all need a little bit of political clarity. A little visibility before we can get back in there, but certainly the value proposition is there.
And in terms of that political clarity, I mean, is yours an industry that's just looking at what's happening and thinking we don't have any strong leadership yet and we're not really sure what's going to happen next?
They are in a situation where we've seen these situations before where their backs are against the wall and situations tend to get resolved at a time like this. We do see Bernanke coming over to Europe, Geithner coming over to Europe. They're working on something.
We'll wait and see.
There will be resolution.
Let's look at commodities. Now, you actually moved out of gold. I think you'd made quite a lot of money before you did that.
Right. I must say, we're not speculators. We're hedge funds, and as a hedge fund, we tend to be conservative. We bought gold as a store of value back in 2003 at about $300 for reasons that I could go into. And this year, when it passed through $1,400, $1,500, it headed into the more speculative arena, and it reflects inflationary worries. It reflects issues such as instability in the financial system. Well, the inflationary worries are gone for now, and if you have instability in the financial system resolved, there's not much to support gold and silver for a while until we start to have inflationary worries again, which we don't really have here. We have a little bit in the emerging markets. Anyway, the rate of change has been so fast lately that it might need to sit a while, but we're no longer there.
Would you go back into gold at a certain level, and where would that be?
That's a great question, and that's depending on what happens with fiat currencies, to what extent the fiat currencies are inflationary. One keeps thinking about printing new euros, et cetera, but at the same time there is the deflationary environment of debt destruction, destroying wealth at the same time. So I can't give you a price.
And what about the idea of euro bonds? We've heard them touted today. Would euro bonds appeal to hedge funds? Is that somewhere you can see a lot of money
I
going?
think so. I did hear one of your guests earlier on saying that it would be a watered down version, perhaps, of a German bond or a German credit quality. But I think it would. I think the world would breathe a sigh of relief if there was a fiscal union about it, but I think that's a little bit farther down the road. I don't think they can come to that consensus very quickly.
You're slightly more optimistic than some people I've spoken to recently.
There's a value proposition out there. There's change happening and there's value in the markets. One is being paid for recession now. I think equities are reflecting recession, credit is reflecting recession, and the economies are going to be, we're probably not going to get any economic growth in the G4 for the next 5, 6, 7 years. But we're not going to go into a depression. We'll just fix things. There will be repair for the next 5, 6, 7 years. Okay. And so, at the current price, it's not bad.
There's a value proposition.
There's a
right
value
there.
proposition.
Okay, Robert Marquardt, Signet Chairman and Co-Head of Investment Management. Thank you very much indeed for joining us.
Thank you.